The economic situation in the United States is dire, and there's many people who psychologically have packed it in, and they're preparing for a recession. But the recent bank earnings coming out of Q2 show us exactly how the consumer is doing on the ground. Our friends over at John Street Capital, they broke down these bank earnings, and they have tons and tons of insights into spending, savings, and credit quality trends. If we start with Jamie Dimon and JP Morgan, they say that, quote, consumers are in good shape, they're spending money. They have more income, jobs are plentiful, they're spending 10% more than last year, almost 30% more than pre-COVID. Businesses, you talk to them and they're in good shape. We've never seen business credit be better ever, like in our entire lifetime. And that's the current environment. On top of that, if you take the combined debt and credit, spend is up 15% year over year. Also, we can see that the average consumer is spending 35% more year over year on gas and about 6% more on recurring bills and other non-discretionary categories. At the same time, they have yet to observe a pullback in discretionary spending, including in the lower income segments, with travel and dining growing 34% year over year. With spending growing faster than incomes, median deposit balances are down across different income segments for the first time since the pandemic started, though those same cash buffers still remain elevated. Of course, lots of people are focused on credit, and that's still healthy. And what we can see there is that positive trends in loan growth across the business, with loans up 7% year over year and up 2% quarter over quarter. Now that brings us to where we go from here, which is, quote, the future environment, which is not that far off, involves rates going up, maybe more than people think because of inflation. There's a range of potential outcomes from a soft landing to a hard landing, driven by how much rates go up, the effect of quantitative tightening, etc. This terrible humanitarian crisis in Ukraine and the war, and then the effect of that on food and oil and gas. And we're simply pointing out those things make the probabilities and possibilities of these events different. It's not going to change how we run the company. The economy will be bigger in 10 years. We're going to run the company. We're going to serve more clients. We're going to open our branch. We're going to invest in the things, and we'll manage through that. So I always remind myself, the economy will be a lot bigger in 10 years. Next up, if we go take a look at Citigroup earnings, we can see that they're quoting higher rates and quantitative tightening will keep volatility high. That said, while sentiment has shifted, little of the data I see tells me that the US is on the cusp of a recession. Consumer spending remains well above pre-COVID levels, with household savings providing a cushion for future stress. The job market remains very tight. You can see how resilient the customer is in the US through the elevated payment rates and the low level of credit losses. They have shifted their spend far more to travel and entertainment, which is now outpacing 2019 levels. When we take a look at Wells Fargo, we can see there, quote, while we're monitoring risks related to continued high inflation, increasing interest rates, and the slowing economy, which will impact our customers, consumers, and businesses, they have been resilient so far. When looking at simple averages across our entire portfolio, consumer deposit balances per account increased from first quarter and a year ago, and they remain above pre-pandemic level. Overall, our consumer deposit customers' health indicators, including cash flow, payroll, and overdraft trends, are not showing elevated risk concerns. However, we're closely monitoring activity by segment for signs of potential stress. For certain cohorts of customers, we have seen average balances steadily decline to pre-pandemic levels following the final stimulus payments early last year. And debit card spend has also been declining. For Wells Fargo, debit card spending is up 3% with transactions flat. Credit card spending is up 28%, although consumer credit utilization rates remain below pre-pandemic levels, and payment rates remain strong with low delinquency rates. If we go take a look at Morgan Stanley, Gorman stated that if he had to use one word to describe the environment, it would be complicated. Quote, we have the Russian invasion of the Ukraine, obviously a historic occasion. We have historically low rates with very significant rate increases going around the world. We've got the tail of COVID. We've got the fears of inflation and actual inflation. We've got enormous political change in the UK, supply chain issues, China-US relations, etc. So yes, it's very complicated. I think it's important to say, though, it is not 2008 complicated. This is a different type of financial stress in the system. Frankly, the banking sector is much stronger than it was going into the last time we went through a major reset in 07 and 08. While we might head into some form of recession, and I, like many others, have tried to handicap it, we, frankly, guessing at this stage. but I think it's unlikely to be a deep and dramatic recession, at least in the United States. Then if we take a look at Bank of America, they said our U.S. consumer clients remained resilient with continued strong deposit balances and spending levels. Loan growth continued across our franchise, and our markets team helped clients navigate significant volatility, reflecting economic uncertainty. As we enter the second half of 2022, we believe we are well positioned to deliver for our shareholders while continuing to invest in our people, our businesses, and communities. We can look at the trends in their loans and leases according to John Street Capital. Deposits and overall asset quality, along with consumer and commercial portfolios, still continue to look strong. Another quote states that across our 35 million core checking accounts, the U.S. consumer remains quite resilient. Consumers continue to spend at a healthy pace. The overall average deposit balance for most client cohorts are higher than where they were in the first quarter, and they rose in June month over month. They remain at multiples versus pre-pandemic levels. Customer data shows Bank of America spent at highest quarter ever with $1.2 trillion of total spending, which is up 12% year over year. Also the highest debit spending quarter on record. In June of 2022, spending was plus 11% year over year, and transactions were up 6% year over year. For the first 2 weeks of July, spending is up 10% and transactions are up 6%. We see shifts on what people are spending on, experiences, travel, and fuel, and less on retail and in stores. In the second quarter, we saw higher gas spend and continued recovery in travel and restaurant spending. Average deposit balances remain elevated. What these reports from the banks are showing is that although there's plenty of fear when it comes to a recession, is that the consumer is still spending money. They're looking for experiences, they're looking to travel, and there's some sort of hangover from the COVID lockdowns. Regardless of what the economic data suggests in terms of GDP contraction in Q1 and potentially in Q2, many consumers on the investment side psychologically have prepared for a recession. They've seen their asset prices fall off a cliff and they're hurting, they're reeling. But the average consumer, the people who actually spend money in the economy to consume goods and services, they're out there, they're still spending, and they don't see a recession on the horizon. Regardless of what you think is going to happen, this is a weird situation. We've got 40-year high inflation. We've got a Federal Reserve that's hiking rates after GDP contraction in the first quarter. We've got investors who are preparing for a recession. We've got consumers who are spending like there's only good times ahead. I don't know where we go from here, but what I can tell you is that there haven't been many times in history where we've had this concoction of different ingredients where both investors, consumers, economists, and people at the Federal Reserve and in the Treasury are all confused. They're just trying to figure it out. Make sure you keep paying attention right now. There's a lot of moving parts, and the future is definitely uncertain. What you always should think about is how to prepare yourself for the worst. But remember, optimists win in the long term. So hope for the best. Keep a good attitude. And my guess is that we'll get to the other side of this.